On the surface, South Florida's property market looked like paradise. Sun, palm trees, and multi-million-dollar homes. Why did the governor of Florida lose control just as the market crashed? The truth behind these cracks and the chaos that followed begins with numbers nobody wanted to face. By late 2024, Citizens covered over 1.3 million homes, the most in its history. That means nearly 1 in 8 Florida homeowners now depends on a safety net funded by every policyholder in the state. If a major storm like Erin triggers huge losses, Citizens can levy surcharges on all Florida insurance customers, even those with private policies. For many, insurance is no longer just a line item. It's the wild card in the family budget. The collapse of private insurers forced a mass migration to Citizens Property Insurance Corporation, the state-run backstop that was never designed to carry this much risk. For families hoping to buy in Broward or Palm Beach, the numbers just don't line up. Incomes haven't budged, but monthly payments have soared, leaving more would-be buyers on the sidelines with every rate hike. The pain isn't limited to first-timers. Sellers who bought at the 2022 peak are staring down a hard choice: cut their price, offer cash at closing, or watch their equity vanish. Nearly 41,000 homes now sit unsold in the Tri-County region, up 61% from last year. Inventory is flooding the market, and desperate sellers are slashing asking prices to chase shrinking demand. The hit goes further in the condo market, where special assessments and ballooning HOA fees have gutted investor appetite. In Miami-Dade, condo listings jumped 43% year over year, with typical units sitting unsold for months. Institutional investors, once the market's engine, are now pumping the brakes. Their share of Florida home purchases fell to 17% in late 2024, the lowest since the pandemic. The question wasn't just whether their policies would cover the next storm, but whether their homes could withstand the forces that new climate extremes were unleashing. The water was warmer, the storms were stronger, and the margin for error had all but vanished. Governor DeSantis stepped in front of cameras at the state's Emergency Operations Center, flanked by top aides and a bank of weather monitors. With Hurricane Erin's projected track still swirling offshore, he assured Floridians the state was fully prepared, repeating that Florida had weathered storms before and would do so again. The governor's statement emphasized coordination, not chaos, and he reminded reporters that the latest models showed Erin's core staying well offshore. But inside the Situation Room, the mood was less certain. Erin's wind field had ballooned overnight, and the storm's closest approach was now forecast within 40 miles of Cape Canaveral. Advisories warned of dangerous surf and rip currents from Miami up through the Space Coast, with local officials urging beach closures and caution for boaters. Emergency management briefings ran late into the night as the state tracked every wobble in Erin's path. While the governor maintained a calm public face, aides quietly flagged the risk of a sudden jog west, something that could turn a near miss into a direct hit with little warning. At the same time, the Florida National Guard stood by with 3,000 troops on alert, but not yet activated. The governor's office weighed the optics of mobilization against the risk of fueling public anxiety. A full call-up would send a signal. The average cost of catastrophe reinsurance for Florida carriers jumped 18%, erasing any hope of premium relief for 2025. For regional insurers already stretched thin, the new math was brutal: higher costs, tighter margins, and no appetite for new business. Some carriers responded by slashing coverage in South Florida zip codes, leaving homeowners scrambling for last resort policies. The capital flight didn't stop at insurance. Institutional investors, who had been quietly unloading Florida assets for months, accelerated their exit. By the end of August, filings showed more than $1.1 billion in Florida property, liquidated by major funds. Blackstone alone closed 3 sales in Miami and Fort Lauderdale, totaling $540 million. All at discounts to 2022 appraisals. Hedge funds dumped condo blocks in Brickell and Sunny Isles, accepting losses just to clear balance sheets before the next round of hurricane season volatility. The message was clear: get out now, or risk being trapped in a falling market. As capital drained, local brokerages reported a surge in price cuts and distressed listings. Investors who bought pre-construction units at the peak rushed to offload contracts, sometimes forfeiting six-figure deposits. In Coral Gables, a 40-unit multifamily portfolio listed for $38 million in June closed at $30 million after 3 weeks on the market. Sellers who hesitated watched comparable deals fall to new lows with each passing week, as buyers demanded hurricane clauses and insurance contingencies on every offer. The effect on the ground was immediate. Lenders tightened standards, requiring larger down payments and proof of insurability before approving loans. Some banks pulled out of the Tri-County area altogether, citing risk models that now factored in both climate volatility and capital flight. Homeowners with adjustable-rate mortgages saw their insurance escrow bills spike overnight, pushing monthly payments out of reach for many. The dominoes kept falling: fewer buyers, more inventory, and a market in freefall just as hurricane season hit its stride. Governor DeSantis walked into the press briefing room, eyes fixed on the floor, as reporters fired questions about the market's unraveling and Hurricane Aaron's threat. Gone was the measured tone of earlier updates. Instead, his voice cracked as he lashed out at critics blaming state leadership for the insurance meltdown and investor flight. He accused the media of stoking panic, dismissing questions about the exodus of capital and the spike in distressed listings. When pressed about the wave of policy non-renewals, he cut off a reporter mid-sentence, insisting that Florida had faced worse storms and would bounce back. The breaking point came when the governor unveiled a $1,000 property tax rebate for homesteaded households, pitching it as relief for families facing ballooning insurance bills and falling home values. Within hours, House Speaker Daniel Perez publicly rejected the proposal, calling it a political stunt and warning it would do nothing for renters or the uninsured. "These checks do not solve the property tax problem," Perez said, comparing the plan to California's failed rebate schemes. The governor's own party refused to bring the measure to a vote. Behind closed doors, the administration scrambled to regain control of the message. Aides circulated talking points blaming federal inaction and global reinsurers for the insurance crisis. But lawmakers from both parties called for real reforms, not rebates. The spectacle of the governor's outburst, broadcast live and clipped for social media, became the symbol of a leadership team losing its grip as the market tumbled. For homeowners watching from Broward to Palm Beach, the scene offered little comfort. With hurricane season at its peak and the market in freefall, the state's top officials were locked in a public blame game. When Hurricane Aaron reached peak winds of 160 miles per hour, the governor deployed 3,000 National Guard members and proposed a $1,000 tax rebate, only to see the plan publicly dismissed by Speaker Perez. Investors responded with a $1.1 billion liquidation, and Miami home prices dropped 12% in weeks. Despite these facts, the true scale of future insurance risks and the full impact of climate-driven storms remain unclear, as several government assessments and insurer risk models are still classified. What is certain? South Florida's market is now shaped by forces that go far beyond one storm or one administration. For buyers, sellers, and policymakers, documented vulnerabilities demand urgent attention, and the consequences of inaction are already being counted in dollars and lives.